Hello everyone, we absolutely slapped the market today. Multiple 40-50% trades. We went long right here, then we went short perfectly at the top, then we went long again, and then long again. So in today's video, I'm going to explain to you guys the reasoning why I entered and exited each of these trades and how you could eventually do the same with this knowledge. All right, so without further ado, let's get started with the video. Number one, each and every single day, you have to look at the larger time frames to judge where the momentum is going to go on the shorter time frames, because we day trade on the 1 minute time frame. So it's important to look at where the daily, the 4 hour, the larger time frame momentum is going to be. So as you know, we've had 8 green days in a row on the SPY, and then we opened up a bit green as well. So I was leaning short in the morning. All right, so obviously that is my bias currently, just a bit bearish, right? So what ended up happening, regardless of my bias, right, to start the morning, we actually really started to drop very heavily. And you could see we had just a complete capitulation. We stopped at this level of support at 437.68, right? Gave people a fake opportunity to start going long, and then we ended up making another leg down. Okay, so I knew, as we know, with overextensions in terms of trading, overextensions cannot sustain themselves. So what we did, very simply, we went long right here perfectly, and we ended up trading this all the way back up to this level of resistance. The contracts ended up going 15%. So this was a nice, smart, calm little trade to begin the day. Okay, the next trade, basically, I basically sold over here at resistance because the momentum was still very bearish. And I was correct with that because we ended up making another low. So in hindsight, we could have also went long over here because we dropped exactly to 437, but we didn't enter long here. Instead, what I did was I waited for, I wanted to wait to see where the market would go in the next few minutes, because we had a major, like lots of things happened. We showed a lot of weakness, and there was still bearish momentum. So I didn't want to automatically just go long. I wanted to wait to see how much strength we actually genuinely had. All right. So what I ended up doing was, so we had major resistance at 437.86. Okay, and we ended up going short right at this level. Literally, we went short right at that level. And the reason for that is because this initial setup, this setup right here is bearish. When you see a setup like this with a red candle at a level of resistance at 430, so 437.68 was that same level of resistance that we sold at earlier, right? For the first trade. For this trade, we ended up, failing, and we ended up taking a short here. And then we sold this for a loss, about 6% loss. Well, I think it was less than 6%. But we ended up selling it for a loss because I initially took this because it's a bearish setup. When you see a red candle at a level of resistance with a upper wick like this, not a strong, not a sustainable move. Okay, so my bias, once this happened, was bearish. So then we moved and ripped again to the upside. I knew for a fact that this was not going to sustain itself. So what ended up happening was we had, like I said, we had resistance at 437.86. We went short at 437.86, and we ended up wicking with a stop hunt above 437.86. This was meant to get people to be overly bullish, and everyone basically, MMs don't want us to trade on the correct side of the market. Okay, they're going to try to make things look the opposite direction so that they mess up with retail. So, but the thing is that we went short, and you only get stopped out once a 1 minute candle closes above or below your stop loss, not in between, not intra-minute, never. Okay, so we still held on to our puts, and this skyrocketed up. It looked really bad intra-minute. But then, we still held, and then we had this big red candle all within the same minute, guys. So this was really crazy price action, and this was an amazing play. So what ended up happening was we dropped very dramatically here, right? And if you guys remember, basically they were trying to paint a level of support. I was saying that this would not be good. 437.33 was a major level of support. They were trying their best to paint it as a good support level where they would try to get people bullish again. But as you can see, this setup looks very similar to this setup. This is also not bullish. So I was saying you should not be going long. If anything, you could re-enter short with a 437.65 stop loss for the momentum to continue lower. And I was saying I was going to hold on to runners as long as it remains below 437.65. And that's exactly what ended up happening. They tried to get people to go long at a level of support, and then we broke it down even lower. So what's interesting is when you see the market makers and when you see price action, essentially so early on in the day, right, they were trying to make you go long at support and simply go short at resistance. Okay, they were going long at support, short at resistance. Perfect, right? So then when this setup came, it was the same concept. Oh, we have to go long at support, right? What ended up happening? This was not the time to start going long at support, right? Because this setup was bearish and because this setup was bearish. So this was a fake out. I was, and that's the thing with the market. You have to adapt to what's going on intra-minute. And sometimes it becomes a bit difficult, but regardless, it's good as long as you can feel which way the momentum is going intra-minute. And wow, the market is dumping as I'm saying this. Give me a minute. Yeah, so basically, to make a long story short, when this failed, right, I knew that this would fail. I knew that the momentum was going to be bearish because I was leaning short this entire time. So even this was not a long opportunity, because after a setup like this where we wick above, this was just a fake move. And even if we made another high, I would lean short again. But, the likelihood of that happening would be very slim. So as we fell lower, we ended up going long right on this candle because we ended up becoming very, very overextended to the downside. And then we sold this up here for another 15% gain. So the reason why we went long over here was because once again, we had a huge move to the downside. And what I did was I created a fib level from the highs to the lows, and we were going to touch this 23.6% fib. I knew we were going to touch that level. So we ended up touching it, and I ended up selling. So then it was just a matter of, okay, what is going to happen with the market after we touch this? I didn't want to go short at this level because I wanted to see if we could go a bit higher, right? So very simply, we went long here, we sold it here. Cool. The next trade was we waited for the market to fall again. And basically, very perfectly, once again, we went long right here. And it worked out really, really well. So, no, we went long right here. And this worked out really, really well. Sold this. And yeah, we can't complain because once again, remember, 436.20 has been a major level of support that I've been talking about time and time again. So what happened when we got here? This was acting as a level of support. We bottomed out over here. We made some wicks, and these wicks are very, very telling. They're very important to look at because it shows that there are a lot of buyers at that level. Similar to the upper wicks that we saw over here. Remember? At this candle right here, it means that there's a lot of sellers at this level. When there's lower wicks, that means that there's a lot of buyers. So very simply, we just went long at this level. And another nice scalp to the upside. We took some really, really high quality trade setups. And if you would have held this, you would have held it all the way up to 437.90. Regardless, everything, we took some really awesome trades, and it was pretty spectacular. So today was a really, really good day. The market was very, very fluid, and we did really, really well, especially given the fact that Powell was going to be speaking at 2 p.m. So with that as well, that's very, very important. So yeah, we had a really good overall day, multiple huge winners. And yeah, I will see you guys bright and early tomorrow morning for more live streaming. Thank you.